So take a look at the overall markets. We start the week mixed. All right. What I mean by that is that NVIDIA is opening up the day down. We're seeing Apple opening up the day pretty much where it ended on Friday, and Tesla is moving higher. That board behind me, that is a mixed bag of everything, and everything looks very mixed coming into today. We saw a lot of buying that happened on Friday, a massive amount of buying that happened in the last 2 hours of the day on Friday that took us off these lows that we saw. So what we've seen is the last half of February dropping, and then that big turnaround day on Friday that took us into the last day of February. What's gone on since then? We've seen the lows now between January and what we saw happening on Friday. Lows are getting higher, highs are getting higher, but we're getting into some consolidation. I still feel real good about us seeing new all-time highs, but we might have to sit in this during the month of March, maybe even April, before we see those all-time highs get eclipsed. More than likely, we're going to see that slow grinding move to the upside. It's going to take us back up to around that 620, 625 area. And then we enter May, which is typically where volatility goes higher and markets get pounded on. But we'll still see upside between now and then. Consolidation between 575 and 615. Let's take this out a little bit further to see if there's any confirmation with a higher stock market in the next 1 to 2 months. TLT, this is the bond market. All right, so what we like to see here is we like to see bonds move higher, but not racing higher. When you see the bond market racing higher, what that means is that traders are moving out of risky assets like stocks and commodities and moving into risk-off securities like bonds. Now, I am all for seeing the bond market move slowly higher, because what it means is that we see interest rates dropping, which is good for the stock market. But what we saw last week, coming out of the 80s and popping up to 90s very quick, was a lot of emotional reactions where traders were just getting to the sidelines. I think that might be a move they're going to regret. If we do see a bit of a pullback in TLT, I think that's okay. I think that's traders second guessing whether they want to get out of the risk on assets. But I do see the bond market making a little bit of a step where we go 2 steps higher, but we take a little step back. That, I believe, is good for stocks. Taking a look at the oil market and going into commodities, I mentioned this last couple of weeks, that mid-February to mid-July is typically going to be bullish for oil. We saw around the 70 to 75% area in the last 15 years with USO. Last 5 years, we've gone up every year between mid-February and mid-July. I've got arrows on the screen that show 2021, 2022, 23, 24, and then the projection we're looking at for 2025, even if we don't make new highs, even if we come back to where we were in January, right? That takes us up about 15% from where we are today. So again, time will tell, but that's what USO looks like. Again, what's good for oil is good for oil stocks. What's good for oil stocks is good for the overall market to some degree. So that confirms potentially higher highs. Gold. So gold, like the stock market, did get a pullback, but last week gold was running pretty high. If you look at the stock market turned in mid-February and started moving lower. Cryptocurrency has been moving lower pretty much since the end of January, but gold moved higher from January, moved higher into February, and only turned tail last week. So where does gold go from here? It's interesting that GLD had a really nice turnaround like the stock market did the end of Friday, and it did show signs of moving higher coming into this morning. So gold could potentially be putting in some support where it is right now and could make another run up to its all-time highs. Does GLD have room to run up? Yes, it does, because again, it is a risk-on asset, and now traders from last week are rethinking what happened last week and potentially moving more into assets and things. And I'd say things, GLD is a thing. It doesn't have earnings. It doesn't have revenue, okay? It is a commodity. It's a commodity that's actually done quite well in not only this year, but even last year, it did very, very well. So all of this kind of spells for a higher move. Now, I wanted to bring up one more thing, and this is looking at Bank of America. I brought Bank of America up because its trend has actually done really well. You look at what the trend in 2024, we're talking about a stock that was coming out of 2023 was $25 a share. Coming into the end of 2024, we were up into the mid to high 40s. We've had some moves, and this is a weekly chart you're seeing of Bank of America. You can see the pullbacks that happened in the low 40s. But the trend, which is saying, hey, are we done yet or not to the upside? I think we still have some moves to go, even if interest rates stay where they are or stay in some sort of a range. The trend is up for Bank of America. Is it likely to move to the higher end and maybe tack on another 10% between now and let's call it that May, June area? Possibly. Here's the reason why I see that. Now, the reason I brought Bank of America up wasn't because of Elliott Wave, wasn't because of seasonality, wasn't because of the traditional things I look at, but I saw something in the options that may be very interesting to look at Bank of America. I have 6 different ways that I can look at what's called top 10s in options. I can look at top 10 cheapest. I can look at top 10 most expensive. I can look at call and put open interest, and I can look at option volume. And so I noticed on option volume, I see a lot of these, a lot of the same things that happen across all 6 of these. NVIDIA's on there a lot, Amazon's on there a lot, Supermicro's on there a lot, Google's on there a lot. But coming into the day, Bank of America was on there on both the high put option volume and highest overall option volume. And it happened to be the exact same put option. And I highlight it here for you to see. This, if you read this gibberish, this programming gibberish, I'm going to walk you through it. 25 is the year, 06 is the month, 20 is the day. This is the options that end on the 3rd Friday of June. The P is the put, and that's the 40 strike. So there's a lot of volume. And we're talking about, you might look at this and say, that doesn't have a lot of volume, Tom. It does, okay? Now, when we look at it, it's not only unusually high coming into the day, but it also came up on the top 10 with all the big boys, the NVIDIAs, the Teslas, the Intels, the Googles, and there's Bank of America down there. It's in the top 10. So I thought I'd take a look at that Bank of America stock price again and say to myself, all right, are these put buyers or are these put sellers? And the answer to that question is yes. They are both put buyers on one side and put sellers on the other side. If I'm looking at the trend and I'm seeing a lot of put selling going on, then I have to ask myself, all right, if this trend is going higher, do I want to be a buyer of the stock? Perhaps. Do I want to be a put seller? All right, I can't be a put buyer and be bullish. If you're buying puts, then you're hedging. Then there's some hedging going on. But if I want to be a put seller, does it make sense to sell puts or does it make sense to look at buying option premium? Well, what I did was I brought back a chart, one more chart of BAC. Here's a chart of BAC, and as you can see here, you know, this red area is implied volatility. So you're seeing the implied volatilities go up and come down, and go up and come down. They typically rise and fall in and out of earnings, which has happened. So if you see over here on the left-hand side, this is the stock price. Over on the right-hand side is the 7 to 30-day at the money IV. Gives me an idea what the option traders are thinking. Up here, option traders are really pumping up the premiums. That's at around 40. Down here close to 20 is where the premiums are very cheap. We're coming into today at around a 26. So we're more to the lower side than the higher side. So if I like the Bank of America, if I wanted to follow up on this one some more and get an idea of you know, does it have some rules-based trades in it other than the options? And if I do like it to the bull side, I definitely want to look at buying options rather than selling because they're cheaper now than they were back in January. They're cheaper than they were back at the end of October. So there you go. Overall market looks good when you look at the S&P heading into the month of March and also into April. We see that. We also see that there's seasonality, and seasonality overall is kind of a mixed bag. But when you look at stocks, bonds, currencies, commodities, there's a lot of confirmation going on with those. And of course, when I look at the what's going on in the areas of high options, high options volume, you see the big ones up there, the Mag 7s all over that. But even financials like Bank of America are starting to tell us perhaps the bull isn't over just yet.